Good morning, good afternoon, good evening, whenever you are watching this final video for the month of April. Welcome, y'all. It's me again. None other than Patrice L. Berry, aka the Tax Cop. So, um, this week's video is based off of a question that I received from a client. I thought it was a great question. Last week we talked about self-employment tax, right? And what you're supposed to do if you're a freelancer, 1099 NEC, if you get a 1099K for 2024, and how to plan. And so this week I want to answer the question that a client asked me during the tax season. If you are one of my clients and you're filling out a Schedule C organizer and or a partnership or S corporation or C corporation organizer, I'm going to ask a question as to, do you have financial statements? Of course, I'm going to ask, did we prepare them or did somebody else prepare them? Do you have them? And when I asked this for a client, she asked, do bank statements, credit cards, and receipts quantify as financial statements? I'm going to say it again. I'm going to say it so everybody can know. Bank statements, credit cards, receipts are not financial statements. They are financial support for transactional data, but from an accountant standpoint, they are not financial statements. I found a great resource in Investopedia, right? That breaks down a great definition of what financial statements happen to be, and we're going to talk about it. That's what we're going to talk about, so you can be aware when somebody asks you for a financial statement, what they're talking about. Y'all excuse all the advertisement. This is what it is. I'm going to page to Investopedia. What are financial statements? Financial statements are written records that convey the financial activities of a company. Financial statements are audited by government agencies and accountants to ensure accuracy and for tax, financing, or investing purposes. For profit, primary financial statements include the following. A balance sheet. Now, a balance sheet is made up, the formula is assets equals liabilities plus owner's equity. Assets are cash and cash equivalents. Liabilities are money that you owe out to people, loans, credit cards, payroll. And then owner's equity is your position in. It's money that you have contributed and money that you have taken out, as well as retained earnings, right? And that's a whole nother discussion for another day, right? Income statement. This is your Schedule C. This is why I talked about Schedule C last week. It's your profit and loss statement. Why? Because it shows your profit, the money that came into your business, right? And from there, we subtract out your ordinary and necessary business expenses to either arrive at a profit or a loss. That's your income statement. And that is what you'll see on a tax return. You are taxed on the bottom line. If that is positive and it's a profit, you're going to be paying some tax on that. If it's negative and it's a loss, you're going to use that loss to offset any other ordinary income. Okay? And then statement of cash flows shows fluidity and cash reserves and things of that nature on a tax return. And statement of changes in equity. Now, in most cases, I don't create statement of changes in equity position, but we can create those reports. The main ones that we focus on for tax preparation purposes is we're looking at your balance sheet and your income statement or your profit and loss statement. Nonprofit entities use a similar but different set of financial statements. They just have different terms or names for those financial statements. But that is how we can tell what is going on in your company, right? Financial statements provide interested parties with a company's overall financial condition and profitability. They're required by generally accepted accounting principles. The ones are balance sheet, income statement, and statement of cash flows. That's why I said primarily those are the ones I'm focusing on. I am an accountant, y'all. Just because I do taxes, I really am an accountant. I have an accountant degree. My undergrad is an accountant. My master's is a master's in accountancy with a concentration in taxation. All right. The balance sheet provides an overview of assets, liabilities, and shareholders' equity. The income statement primarily focuses on company revenues and expenses over a certain period. The cash flow statement tracks how a company uses its cash to pay its debt obligations and fund its operating expenses and investments. Those are your big takeaways. So, no, receipts, bank statements, credit card statements are not financial statements. They are financial sources. They are the information that we use to build out those financial statements for you. Okay? And if you're not sure what a financial statement really looks like, or you got more questions because you have a business and you want to make sure you have a good foundation, how you should go about doing it, don't hesitate to get on our website, right? And schedule a business consultation. In most cases, people need a 30-minute business consultation with me, and we'll break this thing down. And I'll teach you, and we'll get you in a solid foundation for you to do what you need to do so that you make sure that you set that thing up correctly. Because, y'all, if your information is on the wrong financial statement, you could be paying too much in tax. I'm going to say that again. If your information is on the wrong financial statement, you could be paying too much in tax, because I told you that bottom number is what's determining what you're paying tax on. Okay? So, it's the reason why we did the videos in the order we did. Pay attention. If you missed last week, go back and listen to that Schedule C one. I'm telling you, I promise you, there's some nuggets in it. But I wanted to stress out, I'm so glad my client asked about, okay, well, aren't my bank statements a financial statement? No, they are not. Learning the terminology that's used and what the expectation is going to help you as you crawl, walk, run as an entrepreneur out here in these business and tax streets, y'all. All right, until next week, next month, we'll be in May, y'all. How did we get here so quickly? The Mayflowers better be popping. Until next week, I'll see you later. Peace.